As most of you can tell, I was on the prior panel, so I have something to do with small business. Our company's called Raiseworks. We're based here in New York, and we focus, you heard that number sub 250K quite a bit today, so I think that really is the sweet spot. So if we're to think about where are these alternative finance companies focused on, these would be Main Street businesses, by and large Main Street businesses, who have credit needs $250,000 and below. That's where the greatest demand is, and that's where the alternative finance market is most likely to have the greatest impact. So first of all, if we look at where we've been, look at the bank trends in serving that market. So that sub 250 lending market probably peaked for banks back in 2008, and you could see it's back down about 13% since that period of time. That's by sheer number of loans. That's the red line. But if you go back to 2005 levels, in about a third of the country, we're still back to almost where we were 10 years ago. So you say, okay, at the very high level, if you look at the data reported by banks to the FDIC, it looked like banks are way down, right? They're not doing a very good job. But the reality is it's much worse than that. If you look at the very top, the orange is the component that's between 100 and 250K. And you can see that that shrunk dramatically from that 2008 time period to 2013. So you can see that the bigger end, those between 100 and 250, have shrunk more in terms of what banks are offering than the category as a whole. And if you tried to do the math and you said, okay, what's the average loan on this chart below 250? The number comes out to $10,000. So the reality is the average loan that banks are providing in the sub 250 market is only $10,000. That's not really much of a business loan. That's really like a consumer loan. And at the end of the day, as I was saying, when we were talking about what are the underwriting criteria that banks are using, at the end of the day, these banks are really not in a position to evaluate the business. What they're really doing is they're looking at your personal financial holdings. They're really saying, it's great that you have a business here, but what are your marketable securities? Do you have a home? How much home equity? So that paperwork they're asking you to fill out, 99% of it is really going to be about what your personal financial situation looks like, and you're essentially borrowing on your personal assets. But the FDIC categorizes that as a business loan or a C&I loan if the business is essentially on the loan contract. So at the end of the day, you're seeing that bank participation in this market has declined significantly. But at the end of the day, the vast majority of these are not really business loans. They're loans based on your personal assets. So the need that small businesses have to borrow on their own, essentially on the business itself, is simply not being met by banks. And that's why we talk about the banks having abandoned this. The reality is they were never particularly good at it, but they've truly abandoned it during this time period. This is maybe a little bit familiar to Matt at Orchard had looked at the, apologize for the way this came out, it wasn't this way in the original slide. The essence of the slide is that the orange dot in the center signifies what percentage of the whole by category is online. What is coming to you in a digital format. The one on the far right is consumer. The one on the far left is, not exactly, I think that's MCA. But if you look at it as a whole, the reality is those dots are very, very small compared to the totality of lending, no matter what the category is. About 2% of lending revenue is online right now. So you'd say, okay, so traditional banks for small business aren't doing a particularly good job, as you saw from the prior slide, yet the vast majority of activity that exists today, 98% of it is being done in a brick and mortar fashion. Only 2% is being done through electronically. Then you move to the sort of first generation of alternative lenders, which grew up over the last, let's say, 8 to 10 years, serving small business. By and large, they still rely on brokers. So you have a situation where the banks are really not providing a meaningful product to these small businesses, but the existing alternative finance players who are focused on those small businesses, typically those that are doing the daily remittance, what people might refer to as merchant cash advance, the shorter term product, that's the product that's existed for small businesses over the last 5 to 10 years. In the case of Canned Capital, the largest player in the business, 75% of their business is coming through a broker. So there's still a person involved, which seems, very old-fashioned, right? It doesn't seem like the alternative finance, we're going into this digital age, yet 75% of the alternative finance originations through Canned Capital are broker-driven, on deck, it's about half. Probably on deck's probably the furthest along in the industry, and that half their business is now from direct sources, direct to the electronic and other, but 47% is still coming from the broker channel. You got an industry where brick and mortar from the banks, a storefront bank and a relationship manager, or in the case of alternative finance companies, using brokers. Let's talk a little bit about what's inside the head of the business owner. Who are these business owners? So we talked about a Main Street business, a business with a physical location, with a credit need below $250,000. That's who we're referring to at Raiseworks, and most of the folks on the panel are thinking of as a small business and what the need we're trying to meet is. So let's think about what's going through that business maker's head. They're busy. They're working all the time. So they don't have they're not clocking in and out. They're at the store. They're at the auto repair shop. They're at the donut shop all day. They work there. Typically, they're running it. They're paying themselves to run it because they can't afford to pay a third party to sit there and run it for them. They're looking for something that's pragmatic, that's practical. At the end of the day, what's motivating them? They want control. They want independence. They want to get more control over their life. They want to get more control over their time. What are they saying? And these, again, coming from a Havas-Ed survey. If I had better financing, I could focus on growing my business. So if I had better financing, I could focus on growing it, but please, no more paperwork. So the process from banks or the process from brokers, as the first generation alternative lenders are providing, is still a paperwork-driven, non-online process. So you can see that there's a disconnect, right? If you said, hey, I'm looking for something that's going to create simplicity in my life, I'm looking for control and independence, yet you're going to a bank and they're asking you to fill out 10 pages on your personal financial assets, your mortgage. By the way, they probably already have that information, but they're going to ask you for it again, just because banks do that. A little bit about the demographics of a small business owner. Again, that Main Street business that's looking for 250 and below. This study broken into two categories. I think that they were sort of very, very useful categories for us. We sort of said the very small. It's, beyond sort of the sole proprietor where it's just, an army of one, but call it 1 to 4 employees. And then the next category up, 5 to 24 employees. That's the vast majority of companies in the U.S. A couple things that stand out, to me, it's very telling. If you said, what's the age of the business owner, regardless of whether or not it's in the very small or the small, it's right around age 50. How long has the business been around? 15 years. So that image we have of that millennial who's got some kind of a tech business that's in their bedroom and they're selling something on eBay, the reality is those exist, but that's a tiny fraction of business in the U.S. Main Street, which is the vast majority of businesses by sheer numbers, and again, the parties that we're talking about trying to help with the sub 250 credit, it's a 50-year-old business owner who's been at it for 15 years. Skews a little bit male. That's the household income. So these are demographics that they're widely available. They're not going to change very much based on the source you go to, but at the end of the day, think 50-year-old, 15 years. So if you think of that demographic and you say, what is the 50-year-old business owner who's owned a business for 15 years, how do they get information? How do they learn about things like business loans or advice? How do they consume media so they can learn? So what you find is, again, it's very different than millennial who might spend, the majority of their time looking at a cell phone, or maybe they're ordering Domino's on an Xbox, which my son tells me you can do now. You don't even have to go to another device. You can be playing a video game on Xbox and you can actually order your Domino's pizza right there. But for this 50-year-old, at the end of the day, they're still about half the media they're consuming is in that yellow sector, what we call the traditional broadcast, which would be TV and radio, which, by the way, are still by far the largest media, but about half the information they're getting and about half the media that they're consuming is still broadcast TV and radio. That 50-year-old business owner still actually reads a newspaper and a magazine, but as you can see, those are shrinking dramatically. So you'd see in the red, the traditional, what we'd call print, that's what's shrinking dramatically. TV stable, so people still continue to watch, it's cable now, but continue to watch TV to get information. Radio's in mild decline. Then you have that upper left where we talk about digital, right, or online. That's the future, right? So this 50-year-old may have been slower to adopt newer technology and might consume most of their media and get most of their information still from TV and radio broadcast. This is the one that's growing the most rapidly, and it got cut off in the slide, but that online is now 29%. So it's not as big as TV and radio, but it's a big component. Most importantly, it's the one that's growing. If you look at desktop, which is the one device, the stable device where you're getting information, the one that we all started to go online with, that's growing, but growing slowly now. The one that's exploding is mobile, and I think you heard in the first session, Ron Suber talked about the future being that device, and we can back that up with a little bit of data. So mobile, right now, the prediction is that media spend on mobile devices will grow 75% in 2014. So that sliver there, mobile, the spend, the amount that companies are spending to reach people through the mobile device is growing at 75%. The amount people are spending on magazines, outdoor newspaper is negative. TV's growing, but growing slowly. Now let's talk about search. So if that business owner is looking for information, and what we know is right now they're not really interested in wasting a lot of time going to a bank branch. They're not really interested in wasting a lot of time talking to a broker who might ask them to fill out a lot of paperwork. So they're searching. So it turns out when a business owner is searching for a search term like business loan, small business loan, the kinds of things that would be highly relevant to an owner who's thinking about how to get financing, it turns out that already about 40% of those searches are mobile. And this is a survey of these are business owners looking for, this is data directly from search terms built on the term business loan and small business loan. So about 60,900 times a month, there's an online search for those terms, business loans, small business loans, and the like. So they're looking for information. About 40%, though, is coming in a mobile format now. So you can see the future, that mobile device is going to become more and more important. Drawing a couple of conclusions from what we talked about today. Remember in that first slide, we talked about how dismal a job the banks are doing, right? So the banks have abandoned the sector and never were particularly good at it. We've got the alternative lenders that are the first generation, but they're still highly reliant on brokers, right? That's got to change, right? Because that's not how these consumers want to interact with their lender. We saw from the slide where we go back, no more paperwork, right? The business owner doesn't want that. That's going to slow them down. They'd rather not get a loan unless they're literally going to go out of business. They'd rather not take the loan than have to go and spend that time. Forgetting the fact that an SBA loan might take 6 to 9 months, just a regular bank loan where they have to fill out reams of paperwork simply on their own personal financial situation is not attractive for them. But they do have needs. Here we have to think about that demographic, so don't think that millennial. For this sector, it's really going to be that 50-year-old who's been at it for 15 years. How they consume data, still have some catching up to do to the millennials, still about half on broadcast, but the internet's growing, and you can see 40% is mobile, and with mobile spending growing at 75% a year, you expect that, at least according to Google, their anticipation is that next year, Google predicts that mobile overall number of searches will exceed desktop. For this group, ain't going to happen next year. Give it a year or two. But they're catching up, so that mobile device is going to be really important. All that said, the opportunity for folks in this room, both as investors and providers of capital, through platforms is extremely bright. These markets are very large. The small business market is measured in the hundreds of billions of dollars per year. It's not being well served. And in backing the right platforms, it should be a tremendous way to make money for the folks here. Thank you.